Master budget. The master budget brings together the individual budgets for the organization's business functions into a format consistent with the overall financial statements. So, there could be a master budget prepared for the profit or loss account, statement of financial position, and statement of cash flow. A master budget can be seen to be useful in that it represents an overall budget for the organization for a particular period. However, no detail is provided, meaning that it is not very useful for management control. Functional budget. A budget can be prepared for each of the organization's business functions. So, a sales budget may be prepared, or a material or labor or overhead budget could be produced. These functional budgets can be useful in that they highlight the organization's structure and responsibilities. However, many costs could be incurred which do not relate specifically to any particular business function. Fixed budget. A fixed budget is the main budget prepared at the start of the year. It is produced for one level of activity only, based on anticipated levels of sales and production. Let's take a look at an example of a fixed budget. Company C has produced a fixed budget based on producing and selling 150 units. Given a standard selling price of $100, revenue of $15,000 is budgeted. Material and labor has a standard cost of $40 and $20 per unit respectively, meaning budgeted material and labor costs of $6,000 and $3,000. Fixed costs of $1,000 are also expected. Overall, given a fixed production and sales level of 150 units, profit is budgeted to be $5,000. There are advantages to producing a fixed budget. It provides a useful benchmark for control purposes. It illustrates what the organization can achieve given the resources available to it. However, a fixed budget is not useful in an environment that is rapidly changing. A change in expected production or sales levels will render the fixed budget outdated. Also, if actual levels of production were different to what was expected, then it would be difficult to use the fixed budget as part of the performance appraisal process. Flexible budget. A flexible budget is prepared at the start of the year for multiple levels of activity. For example, Company D has produced a flexible budget in that multiple budgets are produced at the start of the year at different levels of activity: 100 units, 150 units, 200 units, and 300 units. Given a standard selling price of $100, standard material and labor costs of $40 and $20, and standard fixed cost of $1,000, then profits of $3,000, $5,000, $7,000, and $11,000 would be expected at each level of production or each level of sales. A flexible budget is useful in that it allows changes in the actual production and sales volumes, and thus can be more easily incorporated into the performance appraisal process.